Good afternoon, everybody. Welcome to the Accounting Procedures webinar. I really do appreciate everybody's time joining. Before we get started, I wanted to remind folks that all the callers have been placed on mute. If you do have a question, please send it via the chat function, which will monitor throughout the meeting and answer your questions during the session. For those of you unfamiliar, the chat function is up in the Cisco WebEx Meeting Center in the top upper right-hand side of the ribbon next to participants. If you click on the chat icon, that will expose a window that you can type your questions in at the bottom where it says enter your chat message here. One thing that I do want to note is that by default it is set to send your message to the host, which in this case is Renee Hagwood. If you click on that down arrow and just change that from Renee to everyone, that way we'll ensure that as you type your chat messages, everyone will see your questions and then we can get them answered. We will also have time periodically in between the different sections for questions and answers, and we will set aside time at the end for questions and answers as well. This webinar is being recorded, and a copy of the presentation that we're showing today will be posted on the Controller's Office website by the end of this week. We are asking that folks do complete a survey, so we will send out surveys to all the registered participants. And we do also recognize that some folks may be attending the webinar in a group setting in a conference room, whereby you're only using one registered name. If you would like for folks to get credit for attending the webinar, please do so by emailing Renee Hagwood, that's RH550 @finance.rutgers.edu. And again, we'll provide that contact information as well. We'll make sure that everybody gets registered, and we are using the HR system for registration, which we'll track, and we'll be able to report back as well as send the surveys. The surveys are important. As you know, we do these webinars. It's important that we are not only connecting with the folks out in the field, but that we are also consciously making improvements along the way. We do appreciate everybody's participation in this webinar and their attention to completing the surveys. Okay. My name, and I'm sorry it took so long before announcing myself. My name is Ernie DeSandro. I am the Interim University Controller with the Controller's Office. I'm the host for this session. I will be the MC, if you will. I will also be joined with folks from the finance organization, namely Sue Heleno, who's our Manager of Chart of Accounts in the Controller's Office, and Ed Shear, the Director of Budget and Policy in the Budget Office. As you may already know from previous meetings, we have an advisory group that has been formed at Rutgers with the central finance teams, and it was really also with the teams out into the field to establish and strengthen our internal controls environment to help us work through the Chart of Accounts Advisory Committee. The committee is here to help everyone understand the procedures and to help manage the units. And so along those lines, we've asked 3 members of the committee to join us today and co-host. So joining us today will be Teresa French-Kowiak from Camden. She's going to help us with one of our topics around funding transfers. Erin Cuomo, the Senior Director for Budget and Finance at IP&O, will be helping us with the expense recoveries. And then Vincent Nacco, or Vinny, from our School of Dentistry at Rutgers BioHealth, who will be helping us with the faculty funds. Okay, so our agenda today is to go through accounting procedures. We'll talk about 3 specific accounting procedures that we will be rolling out on July 1st. One for funding transfers, one for expense recoveries, and then one for faculty funds. As a way of background, you may have seen this slide from various other presentations, but I wanted to reiterate just to kind of make sure everybody's grounded with our joint mission and goal. So, these procedures came out of the work that we did with the Chart of Accounts Advisory Committee, where we determined that, after working with the Chart of Accounts for more than a year, and we were hearing about the difficulties that the staff and faculty and central administration were experiencing with its use, we are constantly, we began developing ways to better serve the university. Some of it you've already seen through Chart of Accounts changes, improved controls in education, guidance, support, and policies to ensure the best use of the Chart of Accounts. This is a continuation of that, but again, to reiterate, our goal is to improve how we support our operations by making the Chart of Accounts simpler to use, ensuring that the data are accurate and easily reportable across the university, making certain that the project subledgers interact seamlessly with the general ledger. In an organization as complex as Rutgers, it's critical to have internal controls framework upon which all the staff can work under to ensure that we are protecting and managing the university's assets. In the 5 years since the merger, it's now time to look at a set of standard procedures. And this framework will ultimately help us manage better because we'll have standard procedures that all units will be following, leading not only to more controls but also increased efficiency. So the following topics we are discussing today represent the first group of those procedures that will be implemented starting in fiscal year 19. Again, we will be following up with additional procedure documents throughout the year as part of a normal course of business. These are the first set. So funding transfers, expense recoveries, and faculty funds. In a nutshell, although we will be providing more details in the slides that follow, as a general rule, funding transfers are used to move resources from one chart string to another to provide support for a specific purpose. Amounts that are transferred from one fund to another must use specific accounts in order to be tracked separately to be in compliance with accounting standards. Expense recoveries are used to record the purchase of goods and services between Rutgers units. Expense recovery should only be used when the actual exchange of goods or services takes place internally, and they never should be used when either party is external to Rutgers. Okay. So as we move into our first topic, before we move in here, I'm just making sure that we don't have any questions on the chats, and of course I don't see any up there. So we're good to move on. I wanted to introduce, again, one of our guest speakers from Camden, Terry French-Kowiak, to kick off the funding transfers section.
Good afternoon, everyone. I'm Terry French-Kowiak from the Camden campus. As a member of the Chart of Account Advisory Group, myself and my colleagues from other campuses offered field perspective for the transfer procedures. We hope you find it informative and very helpful. Sue Heleno will walk us through the content.
Hi, everyone. This is Sue Heleno. We're going to review the definition, the purpose of our accounting procedure, recording funding transfers, some examples of funding transfers, and reporting funding transfers. The definition for funding transfers. First of all, just to be clear, they are for internal use only. Funding transfers represent the flow of funds from one chart string to another. That could be either general ledger to projects or projects to projects. Funding transfers have a similar impact as revenues, transfers in, and expenses, transfers out. But from an institutional perspective, transfers do not represent real revenue or expenses. and must net to zero at the university level. So what is the purpose of this procedure? Well, it is to ensure adherence to generally accepted accounting principles. It's to standardize and promote the consistent accounting treatment for funding transfers across the university. It is to ensure the internal transfers of funds do not increase the total university revenues or expenses or misstate the operating results of any university unit. And finally, it's to properly allocate resources across different chart segment values, such as unit, division, organization, location, fund type, or business line. Okay, let's look at some examples of what is a funding transfer. So when to use a funding transfer, excuse me. So when do you use a funding transfer? Well, you can use it when you're providing funds to an academic unit to cover the expenses of a special event. You can use it to move current year funds for current repair and replacement needs into plant funds. You can use a funding transfer to move a balance to close a deficit in a GL or projects. Or you can use it to fund a designated type project such as faculty startups. When should you not use a funding transfer? Well, transfers are not intended to reclass revenues or costs from one general ledger string to another. And transfers are not permitted on sponsored projects. Please note that funding from donors, example of restricted gifts, cannot be commingled with other unrestricted funds. If a gift is in deficit, it is required that expenses are moved out. Do not transfer funding in. So if you had a restricted grant, a restricted gift, excuse me, that is in a deficit, you can correct this by moving it out by using an expense reclass journal. Okay, so how do you record a funding transfer? Well, when you're recording funding transfers between projects and general ledger, or between general ledger to general ledger, you must record using a general journal or a project cost journal. When recording a funding transfer between or within fund types, you want to find the correct account value by using the transfer matrix shown below. It's also shown in the appendix in this presentation on the last page, or you can go to the controller's website. Please note that funding transfer account values are not valid in PeopleSoft or in RU Marketplace. So let's just take a quick look at the sample portion of the matrix, just to give you a quick overview. This is what this transfer matrix shows is the fund type that is either on the top or the sides of the matrix. And as you come together, you'll see the account value that can be used for those particular fund types. And we'll get into that in a little bit more with an example.
So just real quick, we do have one question that popped up on the chat, so it is working.
Okay.
The chat function is working. Will the presentation be available for download or email to us? Yes, the presentation will be available for download on the controller's website by the end of the week, as well as a recording of this presentation.
Okay, back to me. How to record a funding transfer. Well, the same funding transfer account value must be used on all lines of the journal entry to ensure the transaction will net to zero by account value. All general ledger journal transfers require a second approval by the University Controller's Office. Journal entries that do not balance or that do not have the same single funding transfer account value on all lines of the journal entry will be rejected. There should only be one purpose per funding transfer journal. with a detailed description at the journal entry and the journal line level. So once again, you can refer to the appendix at the end of the presentation to see all the transfer accounts and the fund types. Okay, this slide of the presentation actually shows you all the available account values that you can start using July 1st. And all these account values are on the matrix. Alrighty then. Let's take a look at a funding transfer. And this example is going to be general ledger to project. So Department ABC needs to fund its capital project. Department ABC transfers funds from Fund Type 100, Unrestricted Operating General, to Fund Type 180, Unrestricted Capital Projects. It's doing this by using account value 9400, which is transfer between operating funds to plant. So if you look at the little matrix snapshot, you can see that the fund type of 100 is intersected with the account 9400 for fund type 180. So here's what the journal would look like. You can see that the project number is 751-257, which is a capital plant project. You can look at your expenditure type, which is 9400. And then if you look at the string for your raw cost debit and your raw cost credit, okay, in this particular example, the unit, division, organization, location, business line, and account do not change. The only value that's changing is your fund type. And you can match that up to the matrix on the previous page. Okay, so let's look at an example of a transfer from general ledger to general ledger. A dean is funding the English department conferences by transferring funds from his general ledger under Fund Type 100 to the English department's general ledger under Fund Type 100. And below you can see your basic general ledger to general ledger journal. The debit uses account number 9190, and the credit uses account number 9190. Any questions?
Again, just as a reminder to ask a question, in the Cisco WebEx Meeting Center ribbon up above, on the right-hand side next to participants, there is an icon that says chat. Click on that icon. That will expose the dialog box that will enable you to enter your questions so that we can answer them.
The example on the screen.
In the example on the screen, what has actually changed?
For the example, the UDO probably would have changed when you're transferring from one unit, and we didn't show that, so we'll show that. We'll change the example up a little bit.
Thank you for that feedback. Okay, we have another question. The category is adjustment. This will be for all GL to GL process directly through the financial system. The category field here that says adjustment. It does not have to be that.
No, the category on the GL journals is totally up to you. We're not restricting any type of category used on a GL journal.
Thank you for
We're advising on what it should be.
Yeah. Thank you for that question. Okay. We have a follow-up here. What is the anticipated turnaround time from the controller's office with regards to the approvals process? So generally speaking, what we're doing in the controller's office after the, for the secondary approval, those are turned around within 24 hours. And remember, the controller's office is the secondary approval. You would still have to go through your normal approval process before it gets to the controller's office.
There's designated secondary approvers depending on the type of transfer.
Yep.
Specific natural account, you're saying.
Yep. Okay, so there are specific people that will be responsible for those areas, but in general, we're at a 24-hour turnaround time for those. Okay, so let's continue on. And again, we appreciate the questions. We will allow more time, and here comes another one. Should we be using these new transfer codes for FY18 closing if it's after 7/1? The answer is yes.
Yes. In the June 18 period.
Yep.
This is the direction we're trying to go. You can use it now, right? They're available now. The transfer codes are actually available. We're just enforcing it on July 1st, right?
Yes.
Yes.
Thank you.
Wait, we got another one here. Bernie.
Okay, we've got another question coming in. Do you require supporting documents to be attached to the journal so that the approver understands the purpose of the transaction?
If you have supporting documentation, you're encouraged to attach, yes, because it helps for auditing purposes and it does help the approver in understanding the transaction to approve.
Great.
Okay, then. All right. So we looked at examples on how to do transfers and why we should do a funding transfer. Let's look at some examples of when not to do a funding transfer. Okay, transfer accounts are intended to move funding, not to move expenses or revenues. So you do not use funding transfer for the following types of transactions. So for a correction, our example is Department ABC purchased a printer under 5K. The expense was booked mistakenly to office supplies computer, account value $52,930. Our explanation is that this is a reclassification of an expense. It is not related to funding transfers. The solution for the user would be to reclassify the expense transaction by crediting account value $52,930, the wrong chart string, then debiting the correct chart string, which is account value $58,010 for computer equipment. Another example for distributions. School XYZ shares a copy machine with School ABC. School XYZ pays the invoices directly to the copy machine company and then spreads a portion of the cost to School ABC based on School ABC's use of the machine. Our explanation: this is not a funding transfer. This is an expense distribution transaction. The solution for the user is to adjust the expense transaction by debiting the original chart string, then crediting the chart string.
Okay. Before we move on, we do have another. How do you add an attachment to a non-labor cost adjustment?
Well, there is no functionality to add an attachment on a non-labor project cost journal. It's only on the GL journal. That's a good point.
Secondary approval.
Correct, yeah.
No secondary approval on the project cost journal.
Yeah, so if there's supporting documentation on a project cost journal for your approver, your departmental approver, I would handle that via email.
Great. Thank you for pointing that out.
Okay, and our final example of when not to use funding transfer accounts is restricted funds in deficit. So our example is a gift fund established to purchase textbooks for needy students is overexpended and is in a deficit. The explanation is that this is a reclassification of expenses, not a transfer of funding. So the solution for the user would be that because the funding from donors or sponsors cannot be commingled with unrestricted funds, it is required that expenses be moved out using the expense account value. Funds may not be transferred in. The account segment value used to purchase the books in the gift fund should be credited, and another fund, such as the dean's operating account, should be debited. Reporting of funds transfer. Currently, we have two separate reports available to view and reconcile transfers. One report is for GL to GL transfers only, and the other is for project transfers. The reports can be accessed via the Oracle Financial Management System by following the paths listed below under the Reports and Analytics section. So for GL is your first path, and for projects is the second path.
Okay, Sue, there's a couple of questions here.
And this is good because we're right at the question and answer section.
Okay. All right, so we'll take a little step back. Currently, there is no approval authorization for project cost journals. The transaction post when we submit the journal. Will that change? The answer to that is no. It will not change.
Actually, it is. So it will be changing. We're working on fixing this with Oracle. So the project cost journal is supposed to have a release functionality, right? And that was not working correctly at all times. It works for some users and not for others. So we're working with Oracle to figure that out and get that corrected. We hope to have that rolled out in July. And we're also rolling out the split and transfer functionality that was available in the beginning of the implementation that was not working correctly. And that will require the finance approval, just like a journal. And that'll be for project-to-project only transactions.
Okay. And so we'll actually be transcribing these answers so that we'll provide that with our presentation, again, for documenting this going forward. Okay, the next question, how do you go about crediting and debiting accounts if there's an expense distribution issue like the examples you've named? Well,
how do you go about? I'm not entirely sure, but so if you look at the example that talks about the first one, for the corrections, for the Department ABC purchased a printer using, purchased a printer under $5K. The expense was booked mistakenly to the office supplies computer, account value $52,930. So what you'd want to do is you would want to credit the account number $52,930 for the $5,000 that you purchased a computer for, and then you'd want to debit account $58,010 for the same amount of money. So your unit, division, organization, location, fund type will all be the same account value. Does that help you understand?
Okay, well, we're waiting for that response. We have another question coming in. Can you explain the difference between a non-labor cost adjustment and the GL journal?
So the GL journal is only between GL strings, right? A GL journal for a cost journal is between GL strings and GL strings. A project cost journal can go between projects or between projects and GL, either way. So project to GL, GL to project, or project to project. If there's a project involved, you have to use the project cost journal. It's the only way to get the cost onto the project's cost subledger.
Thank you, Betsy. And we did get some confirmation that our previous answer helped, which was good. Okay, we will continue to monitor the chat room here as questions come through. So GL to GL, there's a question. GL to GL is only done through the financial system?
Yes. Mm-hmm.
That's affirmative.
Yes. Yes.
Okay. So as we move on to our next topic of expense recovery, I want to introduce Erin Cuomo, from our IPNO office. Erin.
Hi, good afternoon. I am Erin Cuomo, Institutional Planning and Operations. I participated on the Chart of Accounts Advisory Board team. My area is a high user of expense recoveries, so I was able to assist along with other advisory board members and the community in defining accounting procedures. I will now turn it over to Sue Heleno to present the expense recovery procedure.
Thank you, Erin. So under expense recovery, we're going to take a look at the definition, the purpose of the accounting procedure, requirements, recording, and some examples. Okay, an expense recovery is a transaction that is used when one university unit bills another university unit for goods and or services provided. The service provider unit incurs all the direct expenses and subsequently allocates an amount to the consumer unit in accordance with an agreement. Expense recoveries must only be used for internal transactions, and that are either facilitated by an internal purchase order in RU Marketplace or a general ledger journal entry or project cost journal. I just want to bring your attention to the word internal transactions, okay? And we'll go over that in a little bit more depth on the next page. Expense recoveries. All expense recovery transactions must net to zero.
Okay, Sue, before we move on, we have another question coming in here. How do you correct an expense recovery erroneously charged to the operating account instead of a project?
So because you're doing a cost correction on a project, you have to use the project cost journal, and then you would do a debit to your project and a credit to your GL operating account string. So project cost journals have to be used if you're affecting the project at all. That's the only way you can get the project information updated onto your project subledger.
Okay. So what is the purpose for this procedure? Well, it is to ensure adherence to generally accepted accounting principles. It is to standardize and promote the consistent accounting treatment for recording expense recoveries across the university, whereby expenses are recorded accurately to ensure that financial statements are precise and do not double count expenditures. It is to ensure that expense recoveries do not increase the total university income or expenses or misstates the operating results of any university unit. And finally, it is to allow service provider units to charge customer units for goods and or services.
Okay, so we have a follow-up to that other question, how to correct an expense recovery erroneously charged to the operating account of a project. The follow-up question is what account number to use?
Well, you would use the same account number that was in the general ledger for the project cost journal. So what was debited in the general ledger as an expense recovery account value, you would use as the debit for the project. The same account value would be used.
Okay. A point of clarification here. We have earlier this year, the University Controller's Office advised that we use account 70300 for refunds that we receive from vendors. Should we still use this natural account since the hotel is external? And I guess 70300, is that an expense recovery? Is that one of the existing?
Yes, it's one of the existing accounts that we have. It will be going away come July 1st. So,
yeah. So the key there, again, is still external. So this is external credit. It would not be charging the expense recovery natural accounts, right? So we can follow up to give you.
Right, but we'll be going into the natural accounts.
Yeah.
Other natural accounts available for expense recovery internally later on.
Yes. Okay? All right.
Ready? Okay. Some requirements for expense recoveries. Both the service providers and the consumer units must be Rutgers entities. If a consumer unit is not a Rutgers entity, revenue must be recorded. All service provider and consumer units will use the account values on both debit and credit side of the transactions to record expense recoveries. The internal purchase order account mapping file can be, on the presentation, this is a link, will bring you to the University Controller's Office website where you can get a list of account values that are used for IPOs. Expense recoveries cannot be used to transfer funds or allocate resources. As I mentioned before, expense recovery account values are for internal use only. So if you have an expense recovery account that is to record external revenues, you cannot use an expense recovery account. Or if you are paying an external vendor, you cannot use an expense recovery account value.
Okay, Sue. Break in here for a couple of questions. I'll pick the easy one first. What happens to the transactions that were already coded to 70300 and others like it? For fiscal year 18, we are not going back. There's no requirement from Central to fix those adjustments. We are asking that in fiscal year 19 we start these procedures and we operate accordingly. Okay, this next one is an earful, so I'll try to go slow here. What would be your solution to this issue? A department cuts an IPO to us for conference services for period June through August, requesting that we charge them the full amount by June 30th. If our department receives the full amount from the IPO but needs to defer the July-August portion to FY19, how will we be able to perform this task without an account violation, since this was received through the IPO hitting recovery account 70080, a requirement of the university on the IPOs, when there was no recovery account on the deferred balance sheet ledger? Is there any provision being made to either use the university's year-end chart of accounts with a recovery account or departments using department's deferred chart of account with a recovery account? I think we have to break this up into little pieces, right? So the first piece, the department cuts an IPO for conference services. If our department receives the full amount but needs to defer, how will we be able to perform this task without an account violation?
So we wouldn't charge them for the full amount in the first place. Is that correct? If the goods and services were not delivered? So you would only deliver for what was, you would only bill them for what was delivered, right? So you shouldn't be overbilling and charging a department just to use up a requisition or a commitment or something.
And there should be no deferral. So it's the
Okay. And if this relates to a specific sponsor project or grant that we need to close out, we'll take that offline. But this was a big question. I recommend that we, contact the controller's office directly, and we can work through that specifically with you. Okay. If another unit is providing a program for our unit, what would be considering a funding transfer or an expense recovery? Excuse me. I'll try to read that again. I apologize. If another unit is providing a program for our unit, would that be considered a funding transfer or an expense recovery? For example, another RU unit is providing a training program for our faculty. Which would be the correct course of action? Go ahead.
So it depends on the nature of the training program being provided. If you're in an agreement that you're going to provide, there's a unit that's going to provide training for your faculty. If that unit is in the business of training faculty, this would be an expense recovery, right? If you're simply entering into a cooperative arrangement with a fellow department, another department that's comparable to your own that just has a certain expertise that you want, it might not be an expense recovery. It could just be a handshake agreement between the two departments that, we'll send someone over to talk to your staff and do a transfer of funding to recognition for your efforts. So it really depends on the nature of the agreement. But if you're hiring that other department to perform a service for you that is typical of the services that unit provides, it would be an expense recovery.
Okay. Thank you. These are great questions, and we obviously have gotten a lot of interaction with this webinar. Okay, so let's continue. No.
Okay, so how would we record an expense recovery? So actually this example is for internal purchase orders. The units that provide the goods and or services would designate the correct account values to use for recording an expense recovery. The units that consume the goods and or services must use that specific account value designated by the service provider unit when purchasing those goods or services. Service providers are expected to include the designated account value required for purchasing goods and their services on quotes, invoices, and all other forms of communication sent to the internal customers who will order through the IPO and RU Marketplace. Some expense recovery values must be used, the same expense recovery values must be used for the debit and credit sides of the transaction to ensure that the accounts will net to zero for accurate financial reporting. So, for the service provider units, expense recovery credits that need to be applied to a project must be recorded via a journal ledger to project transaction to move the expense recovery to a project. So we have a job aid attached here, and that if you need help on doing a project cost journal, you would click on the hyperlink on the presentation for the job aid. The RU Marketplace approver is responsible for ensuring that the appropriate expense recovery account value is being used when placing the order. So in other words, when you're creating a requisition in RU Marketplace and you are not the receiving department. Okay, the finance approver for the journal entries and a project adjustment is responsible for ensuring that the appropriate matching expense recovery account value is being used. Any questions?
Not yet.
Okay, so let's look at an example of an IPO expense recovery transaction. Okay, Rutgers Dining Services incur expenses, which are food items, to accommodate a lunch meeting held by Unit ABC. So dining services incur the expenses, which is debited to their expense string. So if you look below at the little T accounts, you see dining services. Number one is they're debiting the initial food purchase. So maybe, food for lunch. So it's either bread, cold cuts, mayonnaise, mustard, whatever. That's going to be your initial food purchases. Then you have Unit ABC should initiate an IPO requisition in RU Marketplace using the expense recovery account to record the expense on their books. So that's number two. If you look at the Unit ABC, you're going to see a number 2 for expense recovery food. Dining services will receive an expense credit using the same expense recovery account once the IPO process is complete. So if you refer back to the dining services, the first T account, you'll actually see expense recovery on their books. And when you net the whole process, which is your third T account under the Rutgers books, you see that expense recovery for food nets to zero. Okay, let's look at an example of an expense recovery for journal. Public safety provides fixed post-security services to the Camden Law School. Public safety incurs the expenses, such as salaries and fringe, for the services provided on their general ledger. The Camden Law School pays for the services provided using a general ledger journal entry. The journal entry should use the expense recovery account values as specified by public safety on both sides of the entry. So, example, the debit account value would be 74106 for public services, and a credit value of 74106 for public safety services. The department providing the services maintains the expenses on their general ledger in salary and fringe account values, but recovers its cost in the expense recovery account value. The department consuming the service has an expense on the expense recovery line. The matching account value, debit and credit, nets to zero for accurate financial reporting on a university-wide basis. So if you were to bring it back to the slide before, the same T accounts would apply. You would just be changing out Unit ABC for Camden Law School, and you would be changing out dining services for public safety.
Okay.
Hope that makes sense.
We have a couple of questions coming up online. First one is, will it be available with the account numbers tied to the IPO suppliers?
Yes.
Yep. And we will
Show you
the actual link will be on the controller's website. The second question, I'm not sure why you would need to do a journal for this example. Wouldn't you do an IPO? I'm not clear on the difference.
Well, you would do an IPO if an IPO is available for that service. If it's not, then you'd have to do the journal. So it really depends on if the IPO provider is available for the service you're looking for.
Great, I see. Thank you. Okay, we have IPOs in place for all our services. Okay, great. All righty.
Okay. So in the event that an IPO process cannot be used, a general ledger journal entry may be done for expense recovery transaction. The entry follows the same accounting steps outlined above. The same expense recovery account values must be used for the debit and credit transactions to ensure that the accounts will net to zero for accurate financial reporting. Okay, this is what you've all been waiting for. These are new expense recovery account values, and they will be effective July 1st. However, if you want to use them now, they are in the system. Just want to make a note that the current expense recovery account values that start with the 7.0 series will be deactivated on July 1st. So you will be corralled into using these specific new account values. There will be a link on the controller's website that actually shows you the IPO provider with this new account value.
Okay.
And questions and answers.
Good. We're at that point, and we have a couple questions that to catch up on. Okay. So the 7,000 accounts are like the 9,000 accounts, and that they have to be used on both sides of any transaction. Yes. I could answer that one.
I'm proud of you, Ernie.
Okay. We're currently paying the RU Foundation through Marketplace, a non-IPO entry, to contribute towards a portion of our department director's yearly salary expenses. Can you confirm that the RU Foundation is not considered a Rutgers entity?
That is true. They are not considered a Rutgers entity. And you would have to make the payment through Marketplace.
Yeah. Okay, confirmed. Okay. Which is used for recovery of institutional costs like PTL.
So I'm not sure I understand the question, but my question would be, why wouldn't you charge the PTL directly to the correct charge string? PTL is a part-time lecturer.
Thank you, Ed. Okay, another question coming in here. Is there a new chart of accounts hierarchy in the UCO website showing all these new accounts and deleting out all the old accounts we should no longer be using?
We will be updating those chart of account segment values for July 1st. Right, currently they're not there yet, but come July 1st, when you come back, actually on July 2nd, after this weekend, they'll be out there on the website for you.
Okay. Another question. Are the expense recovery accounts acceptable for charging restricted accounts, i.e. grants, for services provided by an RU lab? Budget dollars may have been put in a services natural account.
So I believe they are. Huh?
Yeah.
Yes. Yes.
Yeah.
Expense recovery accounts are allowed to be used on grants, yes.
Expense recovery accounts are acceptable for charging restricted accounts. Okay. Is this the entire list? Which is the code for dining services?
Dining services would be 74111 under event services.
And yes, this is the entire list. Okay. We requested a new value last week, but I don't see it on your list, 70185.
Well, 70185, if you requested it last week, I'm not sure if it was approved, but it will be going away come July 1st because only the account values that you see on the presentation slide are the ones that will be available for use July 1st.
Now, I imagine if this is an IPO asking for that natural account, then we would find another new one in the 74,000 series, but that will be communicated after. We're not using the old ones. Will you be updating the current IPOs that are out there, or will departments need to make this change?
We are updating the mapping. That would be the credit mapping on the IPOs to the new values that have been assigned. We'll be doing that before July 1st.
They might be also asking if we're going to be updating the requisitions that are out there that they've already created that are not going to be provided to, so the units, put in an expense entry now. So it's the decision that we'll be leaving those requisitions as is, and as these goods or services are provided in fiscal year 19, they'll be out of match, right? They'll be out of sync because we'll be using the new expense recovery on the credit side as of July 1, but they've already put these requisitions in, that aren't necessarily going to be, serviced until fiscal year 19. So we'll be out of sync for a little bit. I think we might need to just look at the volume on that maybe and find out how long the services are going to be provided and maybe consider that we cancel some of the requisitions and start fresh. But I think we should take that back and look at that.
Yeah. Okay, thank you. Here's another question. If I want to make an IPO to pay an invoice from dining services, am I using 74111 in RU Marketplace since the supplier determines the account number? Did I misunderstand?
No, you're correct. That's the account number you would be using. And when you go out to the controller's website and you click on that matrix that was shown on one of the previous slides, you will see that the IPO provider for dining services is using that expense recovery account 74111.
We're also going to be working with the IPO suppliers to make sure that the form on the RU Marketplace has the account that you should be using when you place an order with that IPO supplier. And we're also going to be suggesting that they, on any kind of invoicing or quotes, that they use that, they mention that account that they should be using, you should be using.
Okay, they're coming in fast and furious now. So, one RU department pay for cost of a PTL for faculty service. Which code to use?
I still don't understand the question, but I can reach out to the to Carol directly and clarify.
Okay, so I will be paying for dining services and receiving funds for our events, as we have event IPOs on the same expense recovery account, 74111. Is this going to be a problem for my reporting? Nope. No, again, when they're consolidated at the university level, they net to zero.
But individually, your unit will be showing an expense.
Okay. Since RU Foundation is not a Rutgers entity, does this mean that we will need to use a professional services account type to pay for the salary and fringe of our directors of development?
Yes.
Yes.
You can ask.
If we budgeted in Hyperion using the old expense recovery codes, will this be converted as well?
Yes, and we will reach out to the units through your chancellor's offices to coordinate that effort.
Okay. 70185 was approved last week for recovery, vehicle use, and mileage reimbursement. Should we request again to get 74 series?
Yes.
Okay. We will be using this 741 series for all IPO orders through RU Marketplace, right? Or GL payment is not set up as an internal IPO?
Correct.
Great. Thank you very much. I know we have one more coming in. I like the long one. We have faculty staff security deposits which need to be received and held on the balance sheet ledger so that they are accessible when a tenant moves out in later fiscal years. Additionally, they are not considered revenue nor expense recovery, so should not be on the P&L. However, IPOs are restricting us to use a recovery account, which is a violation of the balance sheet. We have been having to move them to balance sheet, but with the new violations, we won't be able to do so. Can you create a balance sheet account for IPOs? It's a great detailed question. And we will, we do have a separate process for the balance sheet items, and we will take that offline again with Lynn. Okay? So can new numbers be requested in the 74XXX series? And the answer is yes, through the normal process. Very good. When preparing an IPO, will the account code field be restricted to the 741 series to avoid a violation?
It won't be physically restricted in Marketplace, but we have a monitoring report that we will be running and you can run as well to make sure that you're using the same natural account or the account segment on your order compared to what the IPO supplier credit account is. Okay. Very good. Thank you very much for all those questions. It certainly is a hot topic. So we'll move on to the next section, faculty funds, and to introduce us there, I want to introduce Vincent Nacco.
Good afternoon, all. Vincent Nacco, Executive Director of Finance, the Rutgers School of Dental Medicine, part of the RBHS campus. As a member of the Chart of Accounts Advisory Group, myself and my colleagues from campuses throughout the university have joined to provide a unit-level perspective related to the faculty funds component of this presentation. We're hopeful you find this webinar to be most helpful. I'd like to turn it over now to the very talented Sue Heleno. Sue, please proceed.
Thank you, Benny.
You're welcome.
Faculty funds. Okay, we're going to go over the definition, the purpose of the accounting procedure, some general guidelines, how to request a faculty funds project, and some examples. So for the definition, faculty funds are resources that are allocated to an individual faculty member or an academic department to support research and other academic activities of the faculty. Faculty funds resources are allocated by university leadership, such as the president, the board of governors, the board of directors, vice president or chancellor, dean or director. Some examples of faculty funds are startup funds, a return of revenue generated by a faculty member, such as F&A, incentive funding, internal research awards, and discretionary funding available to a faculty member. The purpose of this procedure is to ensure adherence to generally accepted accounting principles, to standardize and promote the consistent accounting treatment for recording faculty funds across the university, to track expenses and balances by faculty member or academic department, to track funds by funding source and or purpose, example, startup, incentive, internal research. Also to make faculty funds easily identifiable, and to allow fund balances to carry forward over multiple fiscal years. And the carry forward rules will be determined by the funding source. Some general guidelines for faculty funds. Faculty funds are managed and tracked using the project subledger and must be recorded using the new fund type 160, internally designated faculty. All faculty funds starting July 1st will be in the 3 series. A faculty fund is for an individual faculty member or academic department. There are no minimum thresholds imposed on faculty fund projects. So if you have a project or you have faculty monies for $10, then we set up a project for you. Faculty fund projects will use the following naming convention. It'll be either unit and faculty member's name, specific to the faculty member, such as SAS John P. Smith. Or you can choose unit and academic department, and that would be, for example, SAS Biology Department. An individual faculty member or academic department should use one project and distinguish various funding sources or uses identified by tasks. Faculty projects are funded via transfers. Faculty funds projects do not receive revenue directly.
How do you do a funding transfer, Sue? I'm just kidding. That was in the previous section.
Okay, so are there any questions before I get into how to request a faculty fund project?
I think one's coming through. I can see the little dots going right now. Do you have a change to the existing faculty project to the 3X? Are existing faculty accounts going to be converted to 3 project numbers?
Okay, good thing that you asked, because that's on my next slide. Okay, so let's start originally on how you request a faculty fund project. So you would go to the University Controller's website under Forms Repository, and you would click on the faculty funds, request the faculty funds project. You would do the same as you do for any other non-sponsored project. You would complete it, have it approved, and you would send it to the Chart of Accounts team at coa@finance.rutgers.edu. Any changes to any existing faculty fund project, you would use the same form, have it approved, and send it to the COA team at coa@finance.rutgers.edu. So, if you currently have a non-sponsored designated project in the 2 series that is designated for faculty funds, you have 2 options. You can either set up a new project under the 3 series, and then the department is responsible for transferring the balances to that new project via funding transfer. Or you can spend down your Series 2 projects by the end of fiscal year 2019. So just to be clear, all Series 2 projects that are related to faculty funds need to be spent down or transferred by 6/30/19. Okay, so you can follow the funding transfer procedures that we discussed in the earlier slides to transfer your balances from your 2 projects, series projects, to your 3 series projects.
Okay, we do have a couple questions. I just want to make sure we hit them. Will the funds currently in the 2 be transferred? We just talked about that. The second one is we have already established a process for faculty funding within our school. Is this new project creation mandatory for fiscal year 19, or can we phase it in, committing to a full fiscal year 20 implementation?
Yes, you could. I just mentioned that if you'd like to, you can spend down your Series 2 projects for faculty funds and spend it all down by 6/30/2019, and then transfer the remaining balance to a new Series 3 project.
Okay. Will we be able to convert from the fiscal year 19 active 2,000 projects to a 160 fund type?
Yes.
Okay.
You would fill out the request, the project request form for faculty funds. You would put the existing 2 project number on there, and then we would change it to fund type 160. Okay, we change the project setup, but you, as the unit, has to actually do the transfer journal.
Okay. Do project request forms have to be filled out to convert 2 projects to 3 projects?
Yes.
Okay. Very good. All right, let's continue.
Okay. So let's take a look at an example of faculty funds. So Department XYZ has a faculty member, Dr. Manish Smith. The project is in the 2 series, and its current fund type is 150. The department's manager projected that the funds remaining for Dr. Smith's project will not be spent by the year of 2019, by the end of 2019. So the department requests a new project number in the 3 series and receives a project number of $300,000 under fund type 160. The department now should initiate a transfer of funds remaining in the 2 series project from fund type 150 to the new project using fund type 160 as a project cost transfer. And if you look below, you'll see the matrix of what transfer account number you should be using for this transaction. So if you go down your right-hand side, you see it was a fund type of 150, and you go to the top column, and you'll see 160, and the account value that should be used for this transaction is $9,200.
It's almost like you were clairvoyant that you predicted that question. That's just great. Okay, so we have a couple more questions coming in. Faculty research projects in SAS, anyway, are fund type 150. Can they continue to use fund type 150 until 6/30/19?
Yes.
Okay. And from a different Vinny, if we need to convert hundreds of projects, will there be a mechanism for transferring multiple items in one shot, or do we need to complete each one individually?
There is a template available, so let's reach out to the chart of accounts finance with your request, so we can put that in place. You'd have to give us all the details, and we can put it on a template.
Okay. Will all active reports for 2X projects work for future 3X projects? I don't see why not.
Good question.
We'll make sure that
it's available.
We'll make sure that happens. Okay. So any activity that is on an existing 2 project split out with tasks has to be requested, and then expenses transferred to the new 3X project. How do we track expenditure types? What do we have to make JE? We have to make JEs for each expenditure type so we don't lose detail on the new account. That's hundreds of transactions. in my view, I guess I would just spend it down and then transfer the balance, right?
Yes.
We're not requiring that you do hundreds of transactions.
You can if you'd like.
Okay, did I hear that correctly? Is there a bulk updating mechanism for 2 to 3 projects?
Yes.
For creating the projects.
Yes.
We're updating the project chart of accounts values.
Okay, so here's some clarification on that other question. So we can't just spend down balances. Well,
Is that a question or a statement?
Like a statement.
there's a question mark on the end of it.
Who do we contact?
Oh, no.
So we'd have to, so then you would want to make a transfer then, right? So you'd want to open up your 3s and move them over. If you can't spend them down, yes.
Yep. Okay. Who do we contact for bulk updating of existing projects? That's the chart of accounts team, which will provide the...
Yes, COA@finance.rutgers.edu.
Can you kindly bring up the slide that lists the items included as part of faculty funds, incentives, startups, what else? This slide right here. Some examples. This is not an all-inclusive list. Would it be possible to have a 3X project tied to an initiative that funds faculty instead of tied to faculty members directly? Tied to an initiative, I guess. I guess that would be a departmental, right?
We would need more detail to understand the question. So the faculty fund is not initiative funding. It's funds being dedicated for future use by an academic department or a faculty member. An initiative sounds like a different type of project.
Sounds like a non-sponsored designated, which would be a 2-series project.
Thank you very much for the questions. We'll continue to monitor the chat here for additional questions. And some are popping up here. So transferring the balance will essentially leave us with another cost conversion balance, which gives us no detail of expense type.
You know, transferring the balance will essentially leave us with another cost conversion balance, which gives us no detail as an expense type. Yes, that's true, but in the same token, you can still run reports on your existing 2 projects and combine them through an Excel function and combine the 2 series, 2 projects and 3 projects. I know it's not the best solution, but it is a solution. So the detail that exists in Oracle Financial Management for your existing 2 series projects is still there. It doesn't go anywhere. Okay, so we have a page here for any questions that you may need some help on, is our Financial Management Help Desk. You can also email COA@finance.rutgers.edu. We will help you.
Okay, we have another question. Can we use task numbers to separate different activities or initiatives for a faculty member?
Yes.
This way we can track long-term projects. The answer to that is yes. Okay. As we're waiting for additional questions, we'll just go through in conclusion. Right? We have talked through accounting procedures around funding transfers, expense recoveries, and faculty funds. As I mentioned before, you'll access this presentation as well as a recording of the WebEx on the controller's website by the end of the week. We will also be preparing 3 accounting procedure documents that will be posted that is more the narrative of what we discussed today in more of a formal format that will ultimately become a procedures manual, if you will, across all of the items in the in the financial area.
And just to show everyone the matrix for transfers in its entirety, very nicely color-coded to help you find the intersections on what the natural account or account value should be when you're looking at it. And this can also be accessed on the controller's website under the COA initiative.
I imagine you can zoom in on it too, once you get the real file. I'm getting old too. My eyes don't work. Okay. Okay, so we do have another question coming in here. To establish a link between 2X projects and 3X projects, could we request to keep the rest of the numbers the same?
You can request. I can't guarantee, but we will try to accommodate as much as possible.
Thank you.
There's also a field on the project that we added not too long ago for GCA to link a project with a cost share account project, right? So it's called related project field, and maybe that's something we can look into so that we can use the report that Oracle related to this. Yeah, so let's try to look into that and we'll get back to that.
Okay. Well, I can tap dance for a little bit, but just to thank our hosts and our guest hosts and our speakers and our guest speakers. We did hear from, aside from myself and Sue and Ed, and our guest hosts, Terry and Aaron and Vinny. We also had Betsy Cafiero, thank you, Sue, as well as Christy Orlowski chiming in from the Controller's Office, and Vivian from GCA. So I wanted to thank everyone for joining. And if there aren't any more questions, I don't see anything else here, so let's call it a day. Thank you so much, and please fill out your surveys. Goodbye.